The moment that someone steps out of line and wants to try something different, something crazy like cover cropping or, growing a yellow pea, which most other farmers haven't even seen before, there's a large amount of social pressure. There isn't really an incentive for a community banker to back, a farmer that wants to think about something a little different. And, we're hoping that by supporting these farmers that are thinking about growing food differently, that we can make it more socially acceptable, more normalized, and show that regenerative organic agriculture is actually less risky. It's not more risky than conventional monoculture, chemical-based agriculture.
Welcome to the Regenerative Real Estate Podcast, a show about human environments and how they can be used as a force for good. Conversations that educate and inspire people looking for a different way to do real estate. I'm Neil Collins, and on this episode, I'm joined by Brandon Welch, the founder and CEO of Mad Capital, an investment fund to help farmers transition their farms from conventional management to organic and regenerative practices. I'm going to venture out on a limb and say that the face of the planet has never been more manipulated by humans' desire to control nature than over the last 150 years. What began as the Great Industrial Revolution shaped everything from manufacturing to farming and culminated into what scientists are now calling the Anthropocene, an epoch in geological history where humans have become the dominant force shaping land, sea, and climate. During this period, vast amounts of resources have been dedicated to extract life force from the earth. This has been done in the name of progress, development, and innovation. In many instances, these extractive processes have become so normalized that they become law. So what happens when we want to change this? Where are the resources to do so? And how do you begin to change a paradigm of extraction to regeneration? These are the questions that we've been holding for this podcast, and our guest today is someone who is no stranger to asking big questions like this. Brandon Welch is the founder and CEO of Mad Capital, a firm that was created to help farmers transition land towards regenerative practices. As you'll hear, Brandon began this path as a millennial with a desire to make an impact in the world. After trying to find different ways to do so, he settled on what he considers to be one of the biggest levers of our control, which is food. But his story isn't a return to the land type where he became a farmer. No, for Brandon, his path was towards the financial sector and helping farmers get access to sorely needed capital to transition land. Until very recently, you'd be pretty hard-pressed to find a bank, investment firm, or fund that wanted to invest into regenerative agriculture, much less organic agriculture. And this is why I wanted to have Brandon come onto the show. We get into the founding of Mad Capital and the types of farms they provide financing for, as well as what it's like to go into the capital markets to raise the investment money for regeneration. Mad Capital has now raised several funds dedicated towards this pursuit, and as you'll hear, Brandon hopes that they have been a spark to encourage many, many more firms to get involved in this great transition. Before we get into this episode, I want to get into the segment of our show called the Ecosystem Directory Spotlight. This directory is our Rolodex of companies and organizations that are purpose-aligned that we work with to bring regenerative projects to life. This directory is one way we help people like yourself easily find the resources that you need in order to create healthy, resilient, and beautiful homes, habitats, and communities. It can be found on our website at chooselatitude.com/ecosystem-directory. One of the directory members that I want to highlight today is green.sign. We have a lot of printing and signage needs with Latitude for things like building, architectural, and for sale signs. And we looked high and low, and Green Dot Sign was the only company that we could find in the entire country that voluntarily took it upon themselves to do the deep research into their ink, wood, and metal supply chains in order to become Just Label certified through the International Living Future Institute. And I've got to tell you, it is so fun to see our beautiful and sustainably sourced wood signs out in the world. I encourage you to check out Green Dot Sign for your next sign needs. You can find their website at greendotsign.com. Now, without further ado, let's get into it with Brandon Welch from Mad Capital. How I love to start this, Brandon, is to really understand where you're coming from, because there's a couple things about your story that you've got in your about bio of cross-country treks by bike and by truck before ultimately landing in Boulder, Colorado. And I was like, there's got to be something in him that loves these kinds of journeys. And maybe that's a good place to jump off.
I think so. Yeah, I've always had a sense of adventure, wanting to be outside, wanting to explore. I've never really enjoyed when things come easily, I suppose. So a couple of those adventures that you're referencing, probably the most exciting one that I've been on and my favorite adventure thus far was biking across the country from Boston to just west of Portland, Oregon, to Pacific City. So two of my best buddies and I, right after college, after I graduated in 2016 from the University of Vermont, hopped on our bikes and we started venturing west. We did about 3,500 miles in 54 days and saw a whole bunch of corn and soybeans. We went through, numerous national parks, met some amazing people, and had an adventure of a lifetime. It was, 2 months straight of living out of saddlebags and sleeping in town parks illegally, eating diner food all across the nation. It was a great time.
So at that time, you're fresh out of university. What was the direction that you're thinking? Or was this a great way to prolong that decision?
Yeah.
What's the natural arc into agriculture or finance, or, even if they were disparate at the time?
Yeah. At that point, it seemed like a natural transition period in my life. And I knew, having just looked at others that had gone to, graduated high school, gone to college, and then went down and pursued any career path, that they wanted, that you only have so many of these opportunities in life, probably having a couple beers one night and just thinking about, what was next? What are we going to do with our lives after, college had ended? So, at this point in my life, I wasn't determined to get a specific career in agriculture, in food, in anything that was really more niche or focused than the climate. That was the big kind of thematic idea that I had in my mind, at least at that stage, was I wanted to do something to serve, the earth, something to bring humanity and society back in line with some of our natural constraints. But I wasn't tied, and I still am not necessarily tied to like the specific avenue of how to do that. But over the last 6 years, I've found the path of agriculture and food systems, and I've become just really passionate about it. But it's not something that I grew up around. And it's funny though, the fact that I was biking through the Midwest, and from essentially Western Pennsylvania all the way to Eastern Wyoming, I was just surrounded by corn and soybeans the whole time. And that was my first real exposure to even being in farm country and agriculture. But I hadn't had the slightest clue that I was going to end up spending 110% of my days thinking about it. And that's where I am today.
And so connect the dots for me. What's that bridge between Mad Capital and biking through cornfields?
Yeah, good question. So I biked across the country. Right before I left, I had met my partner and now wife, Lily. She's a year younger than me, was set to graduate in 2017. So I was actually planning on biking across the country and moving to Portland, Oregon with what was on my bike, and then rooting down and starting what would be, my life in Portland, Oregon. But I met Lil. So I ended up, after biking to the coast, I ended up going back to Vermont. We moved in together for a year while she graduated. She graduated school. We then thought, oh, this is another transition period. It was a way for me to kind of double down on another person's graduation. So we ended up building out the back of a Toyota Tacoma and into kind of an adventure mobile with a bed in the back and a kind of full ability to, cook coffee, make food, and really be able to travel. And we ended up doing roughly a 3.5, 4 month road trip all around the western half of the United States, with the first stop that we came to in Boulder, Colorado. We had a bunch of good friends here that were in grad school. We had a nice place to stay, and we first kind of just buzzed across the country, made it to Boulder. And while I was here, this is like week one of the road trip that we were launching in 2017. I had decided to start a podcast to just have an opportunity to interview interesting people and give them a chance to speak about their work. I thought it was a nice avenue to just kind of build a community, build a network without necessarily having much social capital leaning into that. So I ended up interviewing this man named Brad Smith, who was working for the city of Boulder, who had launched numerous initiatives around electric vehicle rebate programs, the local biking program where you can have access to like community-owned bikes. And we had a really interesting discussion. I was really fortunate that he gave me the opportunity to interview him. And long story short, by the time I'd actually made it out to your neck of the woods in Washington, I got an email from Brad sending an opportunity with a nonprofit called Natural Capitalism Solutions, Hunter Lovin's nonprofit, for a potential internship. So I thought it was interesting. I applied for the internship. I ended up being accepted. I started managing a small carbon fund called the Colorado Carbon Fund, which is a nonprofit based in Colorado that does carbon removal and carbon mitigation projects, and then sells those offsets to individuals and businesses located all within the state of Colorado. So just as I was on this arc of really starting to explore a lot of the different ways that we could help address climate change and do it in a way that I think really brings along like economy and ecology, not just one at the sacrifice of the other. Because I'm a big believer that to make impact durable, it has to be just as profitable or more profitable than kind of the conventional way of doing things. As I was starting to explore that in the carbon market sphere, at least, I got an email from Phil Taylor at Mad Ag. He was just starting to think about what this entity called Mad could be. And he wanted to know how we could get farmers paid for sequestering carbon into their soils. And at this point, I really didn't have a clue how we could go about doing that. But I ended up getting coffee with him. We hit it off. And over the course of the next 2 years, we started building an organization called Mad Agriculture that, helps address climate change across helping farmers sequester carbon in their soils, helps address, biodiversity issues by helping them transition to organic and use less synthetic kind of petrochemicals and fertilizers. And I was just totally entranced by focusing on the food system and focusing on natural based solutions, because it was less myopic than just focusing on carbon alone, because carbon is one part of the story. But, the water cycle, biodiversity, rural economic development, growing healthy food for people, helping addressing a lot of the, obesity and cancer issues that we're seeing across the nation and world. My mind was just open to this new way of thinking about how we can actually work with nature and at this nexus point that is so fundamental to to everybody's life. And it's also this means of bridging all of the kind of cultural divides that we're seeing in the United States right now across, left, right, and all of this entire political spectrum. So I kind of walked this really unexpected path and stumbled my way into now having co-founded Mad Capital and trying to create a means of solving capital as the resource barrier for farmers transitioning to regenerative organic. It wasn't something that was planned or necessarily expected, but really grateful and feel fortunate that I've ended up where I have on this unexpected path.
Oh man, let's dive into that, because I think the first time I had heard about farmers transitioning from conventional or chemical agriculture and into something different than that was really from Zach Bush's film in the work of Farmers Footprint, of providing philanthropic capital to make that bridge. And it seems like there's a lot of now interest in ways in which we can do that maybe more effectively than just the philanthropic sector. But I think I would personally characterize what you're doing as, just a part of that movement, that it's now sophisticating and maturing. We're still at the very beginning of it, but just to see that Mad Capital is around is one of those really hopeful signs that the industry is starting to change.
Agreed. Yeah, I feel as though the wave has been rising for a few years now, and it's starting to break. And I think Mad Capital emerging, Mad Markets, Mad Ag, all of the other community partners, and what would be in other industries, I guess, called competitors, are starting to really bubble up. And that's exciting for us because it's proving that it's a problem that needs solving, and there are viable solutions to help farmers, make the transition and to make the change. I mean, there's so much space and opportunity for new businesses too. I hope that we end up seeing, hundreds of new companies like Mad Capital emerging in this space, because there's a lot of room for us to all row in the same direction.
Give me an overview, Brandon, of what that looks like for you guys in order of like, what kind of farms are you working with? What kind of financing and capital? Yeah, let's start there.
Yeah. So the farms that we work with, we classify as mid-size to large family farms. So we're focused in the United States, largely between the Rocky Mountains and the Appalachian Mountains. So think corn and bean country into the high plains, large ranches, holistically managed, livestock operations. So our whole focus is landscape level change. We're fairly agnostic whether we work with a 1,000-acre farm or a 10,000-acre farm. If you look at the technological trends that are developing, it's going to continue to get easier for less farmers to farm more acres, as technology just improves the labor leverage, right? As you can automate a tractor and still get the same outcome and grow the same amount of bushels. We just want to make sure that the way that those stewards, those farmers are treating the land is in line with natural-based principles and within the resource constraints of what's possible. We want to ensure that land is stewarded properly. And in our perspective, regenerative organic is the pinnacle of how that can be done. So growing food in a way that's chemical-free, GMO-free, using regenerative practices that really enable and empower soil health. So these are practices like cover cropping, having a diverse rotation, adding perenniality into the mix, integrating animals. It's really a new way of seeing farm management, and it's challenging. It's not easy to operate within a living system. So we need the right tools and a lot of learnings in order for farmers to really have a high degree of operational capacity to manage regenerative organic at scale. So as of today, we are in 14 states. Our average farm size is 1,850 acres. Our average farm is growing 6 different crops. A large majority of them are cover cropping. Most are using some form of conservation tillage, reduced tillage. Almost all of them are family farms. They're not classified as like a corporate farm or a corporation, typically multi-generational. And they're all entrepreneurial and trying to push the needle. I mean, every farmer is an entrepreneur. They're a business owner. They have to sort out a variety of challenges as being a sole business owner many times. Where are they going to get their money? Where are they going to sell their crops? How are they going to build their business plan, their agronomic plan? And then, to throw it in the mix, the weather's always changing and the market's always changing. So it's hard to be able to finagle all these, where typically, you'd have an entire team that's operating across this expanse. If you were at a company, you would have the right people and specialists to address each of those needs. So that's our focus. And most of our farmers, from a crop perspective, as I mentioned, at least via the geography, they're growing corn, soybeans, oats, alfalfa, and then almost all of them have some sort of experimental zone or a smaller portion of their acreage where they're trying, edible dry beans, lentils, heritage wheat varieties, kernza. They're looking for ways to expand into the more food grade varietals, and then learn the type of management that can actually get them to the right protein levels and quality to be able to sell into a food grade market. And then on the livestock side of the equation, we really look for pasture-based, grass-fed, grass-finished, holistically managed systems. So in line with a lot of the work that you'd find from the Savory Institute. And that's how we, think about the types of farmers we want to help grow and take on more acres so they can do more of this work at scale.
So two things. How do most of these farmers end up beginning to even change their thought process around this is how the farm's been run for several generations, to a more life-giving approach that's in harmony with nature's principles, as you had said? And second, why can't they just go into a bank or their local credit union and say, this is what I want to do, and can I take out a loan?
Yeah. So the cultural pressure and the cultural stigma of doing something different in ag country is enormous. I mean, imagine if everybody around you and your whole family and all of your friends just grew corn and soybeans, and they did it in a really particular manner by buying a specific seed package, spray package, managing it throughout the season, without tillage or minimal tillage, harvesting, and then selling to the same exact elevator. The moment that someone steps out of line and wants to try something different, something crazy like cover cropping or, growing a yellow pea, which most other farmers haven't even seen before, there's a large amount of social pressure. When an organic farmer is suddenly, growing 3 or 4 different crops that their neighbors have never seen, when they're not spraying and they actually may have some weeds coming up in the field, it's seen as almost a threat and almost an act of revolution against someone's identity. I mean, you're questioning like the identity of the American farmer in many ways. So because of that stigma, when a farmer walks into the bank and they propose this wild idea that they want to transition to organic, which takes 3 years to achieve the certification. And typically during those 3 years, though you're farming organically, they're not able to achieve the certification. That results in a reduction of yield during those 3 years. So they're going to be in a negative cash flow regime for up to 36 months. That proposition and that plan, though it's proven and known, and there's numerous enterprise budgets out there from universities and private studies, and then directly from farmers who are willing to share that information, that's just not a big carrot for a community bank to get behind and to want to support. It's an entirely new way of seeing financial risk, of seeing ecological operator risk, and learning that there's actually a market, a buyer's market, that is willing to pay 2 to 3x that of what all of their conventional guys are growing for. Organic corn in today's market is a little suppressed. It's about $8, $9 a bushel, whereas conventional is right around that kind of $5 to $6 a bushel mark. But historically, all of the traditional commodities flowed at about 2x the price premium of conventional. So this has been the case for 20 years. So It's challenging for a farmer to build that case, to build the business case to a community banker who has 99 out of 100 customers that walk in that want to just keep doing the same old thing that their dad did and their granddad did, and that's what they know. So there isn't really an incentive for a community banker to back, a farmer that wants to think about something a little different. And we're hoping that by supporting these farmers that are thinking about growing food differently, that we can make it more socially acceptable, more normalized, and show that regenerative organic agriculture is actually less risky. It's not more risky than conventional monoculture, chemical-based agriculture.
Brandon, what have you learned is the right kind of financing? Is there a pattern or characteristics? I mean, one of the things that I really love about reading on your website is it's almost this bespoke approach towards financing that is almost the antithesis of the financial industry, that it's all about efficiency. So, what's been your real insight to say, this is how people are really needing capital for this transition?
Yeah, every farmer has a different financial situation, depending on if they've inherited land, if they're a new farmer, if they've found themselves in a position of too much leverage and their debt service is really high. I think it's important to recognize that there's different types of capital to solve different types of problems. Our capital that we have at MadCap is debt, typically senior debt, that can be structured in a way that can meet many farmers' needs, but it is certainly not for everybody. Sometimes the right solution is equity and having an investment partner that can maybe defer payments for a significant amount of time, or can come in and do like an equity cash out model. So a group like Fractal Ag, for example, is doing a great job at exploring this. But at MadCap, we're very focused on kind of reinventing how the traditional ag market thinks about curating debt solutions for farmers. So the nice thing about debt is farmers are familiar with it. They're used to borrowing. It's a very normal way of going about business. We don't take any governance or ownership over the farm, and it can be empowering. And it can be a great financial tool for a farmer building equity if they know they can borrow at 7 or 8% and take that cash they borrowed, invest it into the farm, and then have a return on invested capital at 25 or 30%. That, from an opportunity cost perspective, they're making a great decision, and they're growing their equity. I mean, their return on equity is a pretty big spread over their cost of borrowing at that point. So some of our big learnings is really just the need to listen and understand farmers' individual context. Their personality in relation to risk with debt versus equity. I mean, not everyone wants to be obligated to pay the bank back or a lender back on a monthly or a quarterly basis. Some farmers would rather have 24 months of cash on the sidelines and fund the entire operation themselves, even though they have a very positive return on equity while investing that capital. So being able to listen, I think, is one of our unique value adds that really separates us, because we can hear what a farmer's pain points are, where they're struggling, how they're struggling, and then we can hear where they want to bring the farm and where they want to go. And then we work with them. We co-create with them a financial strategy, a loan package or a loan product that meets their needs. And there's only so many ways to structure, debt. So fortunately, we've seen quite a few situations that allow us to almost have 15 or 20 templates of sorts that have given us just the mental capacity to be able to span a variety of situations and then stitch together a package that meets a farmer's individual needs. Our kind of flagship product in many ways would be an interest-only operating loan, particularly during the organic transition years. So that allows a farmer to free up cash flow for those 36 months that it takes to transition to organic. And then once they have the USDA certification, they're able to get the premium in the market. They can then work on paying down that operating note, or we can work on terming that out and throwing it over a 3 to 5 year amortization, because then they're in a different financial situation on an acre by acre basis because they're able to get that premium from the organic crop. So I think the bigger learnings is being patient, listening, allowing farmers to feel heard, and just being responsive, being able to pick the phone up when people call and then follow through with what we say we're going to do is unfortunately that is actually an edge, because there's so many stories that I hear from farmers where they call their banker and they needed something done and they might not hear from the banker for, a few weeks to a month because that banker's out busy, doing something else. And that's just not the level of service and kind of integrity that at least we want to show up with at Mad Cap.
Wow. That's something, what a skill, the ability to have flexibility around that and to really meet the market where it's at. Brandon, I'm curious about really your business model as well. If we can go there, I think a lot of people, if they're not fluent in this conversation around capital allocators and investors, they don't realize that it's almost like a middleman position, that you're raising funds as well. And so I think you're in a really unique position to speak to where is the interest at right now? Are investors interested in this? Is it still, concessionary returns or still really led by philanthropic endeavors, and how that's been going over the last couple of years?
Yeah, good question. The way that we think about our business is that it's a two-sided market. On one side, we have farmers that are looking to borrow capital for equipment, infrastructure, real estate, or operating needs. And then on the other side of the equation on Mad Capital, we have investors. So these are family offices, foundations, high net worth individuals, those with capital looking to allocate it. But between those two markets of investors and farmers, there's an enormous amount of friction of getting to build those relationships, getting to know the farmer, collecting documentation, analyzing that documentation like balance sheets and tax returns and, credit scores, making a decision on if there's a fit between the source of capital and those seeking capital, and then managing the relationship and servicing the actual financial transaction. So that's the work of Mad Cap, is building that plumbing and connecting those two worlds and living in the tension between an investor wanting, maximal returns, maximal impact, absolute, next day liquidity, and a farmer wanting to pay, the least amount, wanting the least amount of reporting, also wanting liquidity and access to capital. And being able to make those two worlds meet is the work that we're constantly driving forth. So, what that ends up meaning from a business model perspective is, our revenue is generated from three different sources: management fees on funds. So we raise captive LLC funds from investors, and then we charge them a quarterly fee for finding farmers that fit the criteria outlined within those funds and properly stewarding them. Spread. So we have a couple of lending partners we've been able to stand up and work with, where we have a fixed cost of capital with those partners, and then we're able to lend to farmers at a cost that is slightly above what we're being charged. So that can begin to cover some of our operating expenses. And then origination fees. So this is to account for the due diligencing, appraisals, closing costs. There's numerous costs that are involved in a transaction, particularly a real estate transaction, which I'm sure you're familiar with. That can, it can add up pretty significantly once you throw, legal in there, and you have a variety. You might have 5 or 6 different parties coming to the table to get a real estate deal done. So that's the basis of our business model.
What's the appetite that you're finding from those family offices and others like them to get into regenerative agriculture?
Yeah, so far it's been pretty good. I will say the general market, I think, knowing other groups that are out there raising capital, they have had a slightly tougher year. 2023 has been a year of, I think, uncertainty coming from 2022, which was a horrific year for bonds and for just private equity and for public equities. It's been tough. So into 2023, I've been seeing other fund managers and other groups that are raising capital struggle unless they're, involved in AI and can kind of slap, that on the front end. So we're actively fundraising into a second fund vehicle. The way that that's come together from a timing perspective has been pretty beneficial to us, and I think actually set us up for a pretty strong 2024. So we've certainly been having interest. I think as private credit is starting to kind of make a comeback in realizing that we can generate non-correlated returns with a fully, securitized transaction into a diversified portfolio. That's something that is pretty attractive to investors seeking, alternative markets, in particular with an impact leading in itself. So we've had a fair bit of interest, largely from family offices. That's kind of the primary zone we've had success with, as well as foundations. So come Q1 2024, we're going to have some exciting announcements to make with about 4 to 5 fairly large investment groups that we'll be excited to talk about, which is going to set us off into a pretty good 2024 lending season as well as fundraising season in our next fund.
So your first fund was 10 million. And then where are you at for 2024?
Yeah. So first fund was 10 million, and that was raised and closed in 2021. 2022 was largely focused on putting together the holdco, so Mad Capital Group PBC. 2023, we were able to form a couple of lending partnerships, and then we began raising the second fund. And the second fund is a $50 million private credit fund focused on, transitional operating loans, real estate, equipment, and infrastructure. So if all goes well and according to plan, we will have raised a fairly substantial part of that 50 million by the end of 2024. And again, we'll have some exciting announcements about some of the progress we've made on that second fund come Q1.
Well, hey, Brandon, I got 2 last follow-up questions for you here. First is where can people learn more about this if they're farmers looking for transition financing, or if they're investors that are looking to put their money where their values are?
Yeah, you can go to madcapital.com. There's a contact us form on the website where you can reach out, or you can email me directly at brandon@madcapital.com. We'll also have an investor landing page that we're coming out with in the next month or so. It's just in the final versioning of design. So we've been in the depths of Webflow the last couple of months putting that together, which has been a fun experience. So we'll have a dedicated farmer landing page as well as an investor landing page.
Yeah, awesome. And so last question is when's your next long distance cross country bike, foot, or hike trek that you're going to be doing?
It's a good question. I've started thinking about it, and I believe after we go through raising Fund 3, so already thinking about the, $200 to $250 million Fund 3, after that's over the hump, I'm probably going to be in need of a mini sabbatical, a mini retirement of sorts. So starting the noodle on the Appalachian Trail and hiking that, call it 2026, 2027. It's going to be down the pike a little ways. But in the meantime, I've had numerous small adventures as well. I still get out and do a couple of bike tours every year and, are able to travel and do things. But carving out 3, 4, 5 months is pretty challenging these days. But I've got my sights on it. Don't worry, Neil.
Indeed. Well, Brandon, thanks so much. It's I know we could have gone into so many different areas of MAD and everything that you guys are doing. I think it's really amazing to see that kind of a platform come together. And keep up the good work. And whenever you want to announce new features, we'd love to have you come back on.
Awesome. Thank you so much. Appreciate the time.
If you want to follow our work at Latitude, You can follow us on Instagram at latitude.regenerative.re, and mine is at I am Neil Collins. We inherently believe in the potential that comes from connecting value-aligned and purpose-driven people together in community. That's why I encourage you to join our mighty network and introduce yourself to the other people working across the globe to advance a more regenerative, resilient, and beautiful world. Here, we want to know what you're working on and what inspires you. Through this platform, you can attend live events, take courses provided by our podcast guests, and create connection with other people and businesses that share your same passion. To join, find the link in our show notes or visit our website at chooselatitude.com. If you'd like to support the show, please share it with your friends and be sure to follow us on your podcast app so that you always have the latest episode downloaded. Another way to support our regenerative field building is to leave us a rating and review on Apple Podcasts. Positive ratings help attract amazing guests, and they can be the deciding factor for someone else to tune in and listen. And who knows, maybe this is the kind of motivation that it takes for them to finally decide to align their profession with their sustainable and regenerative values and become a positive force for good within their own community. This show was produced by myself and edited by Anthony Wallace and offered as a part of our work with Latitude Regenerative Real Estate.